All right, welcome back. If you are new to the channel, my name is Joey. Okay, I'm a funded trader, automated trader, guru. Okay, I'm not a guru, but if you're watching this video, this is about how to get funded in 2025. If you really are watching the video, you probably struggle to get funded, or you've gotten funded and you always lose the account. We're going to talk about that today. I'm going to go over my strategy. Going to go over what you should do, what my recommendation is for you. Okay, but to start off, before we dive into the charts, it's very simple. A lot of you probably, first of all, if you're going to click off the video, let's be real, you probably don't have the correct mindset for trading. Okay, so if you're going to watch the whole video through, good. You probably are going to succeed one day. Okay, but besides that, before I lose my train of thought, it's very simple. You probably have too much knowledge. Okay, you need to dumb it down, take a few steps back, and just stick to a plan. A lot of you have a trading strategy that you know, have a trading strategy that you like. You just have to stick to it. That's all you have to do, right? Stick to the plan. That's it. Make more than you lose, all right? Stick to a plan and don't deviate from the plan. If you have a strategy that you like, stick to it for more than a month, okay? Before you jump and jump and jump. I've done this before too. Have a strategy, stick to it. If you're jumping every few weeks because you think something's better, or every month you try and find something new, it's not gonna work. Okay, just stick to something and it'll work out. Even a trend line strategy. Okay, everyone says trend lines don't work. They still do. Just practice and stick to it. Okay, now let's jump into the chart. Okay, so we're gonna go over how I trade, how I look to trade, how I've gotten funded, how I've passed accounts, how I have gotten payouts. Okay, so I'm using an indicator called Say Hi. You can see it in the top left here. Okay, it's not a free indicator. It's not my indicator. Okay, it's just an overlapping fair value gap indicator. Okay, now you could draw this out on your chart just with regular fair value gaps as well. Okay, so I'm gonna go over what I like to do and why I like to do it. Okay, it's a very simple strategy. It's like literally 3 steps. And I make a plan at the start of every day, okay? Make a plan at the start of every day. I'm interested in this level. If it gets to this level, I plan on shorting with a 10-point stop. That's literally all you do. And have it predetermined. If you're jumping in blindly, then it's not gonna work out as well, okay? Have a predetermined plan and execute, okay? So this morning, see how the market moved down this much? I took longs this morning and I still made money because I stuck to my plan, okay? So let's go over my process. Okay, so these white lines here are Bollinger Bands. Okay, if you don't know what Bollinger Bands are, it's a measurement of volatility. Okay, so the wider the bands are, the more volatility. The tighter they are, the less volatility. I wait for price to move beyond the outside of the Bollinger Bands, above the Bollinger Band or below. Okay, so like right here. Then I look for a liquidity sweep. Okay, so like right here, there's a nice low. That's liquidity. Then I look for a overlapping fair value gap. So on the chart here, it looks messy. It's really not. The blue fair value gaps are going to be overlapped lower time frame fair value gaps. And the brighter blue they are, the more gaps are overlapped. Okay. The red is just a higher time frame fair value gap. Okay. So put all 3 of these in combination. I look for a move outside the gap or outside the Bollinger Band, a liquidity sweep, and a tap into a gap. Tap into gap. Okay, so what is that? Right here. There's a gap that started here earlier. It dug into it. I would have taken a long. This is a few minutes before the open, so I didn't take it. Okay, but say this was after the open. Boom, take a long 10-point stop, and I usually go for a 2-to-1 risk reward. Risk 10 points, make 20 points. There you go. Okay, that is my strategy. It's as simple as that. Have a predetermined plan. If we moved up into this blue up here this morning, outside the Bollinger Bands, I would have taken a short, or here, I would have taken a short, okay? Now, this is what I actually took today, okay? You can look at my past live stream from this morning. This is what I took. I took a long here at 353. We swept this low, moved into these gaps. I had a 10-point stop. Okay, so that stop loss got hit, okay? No big deal. Then on the same candle that I got stopped out on, I noticed we were wicking right here, okay? Out of this fair value gap. I took another long. I got a fill right at the low. 10-point stop. and I had a 20-point take profit. Okay. Still met my criteria for entry. Boom, I made $400 there, and now I'm green on the day. Okay. $200 loss, $400 win, I'm green on the day. Then the next trade I took was over here. Okay. I was then watching for us to sweep here, move outside the Bollinger Band into these fair value gaps. Okay. We did do that. I got a fill at 328, which was almost the bottom with a 10-point stop. And here again, 2-to-1 risk reward. There you go. Now in this trade, I didn't hold for the full 20 points because on Top Step, you only need $200 days. And today I was not trying to shoot for the moon and the stars. Okay. So I was just going for a little over $200, ended up with $291 on the day. So I sold like somewhere around here. It was like right near a 1-to-1 risk reward or something. Okay. So you don't need to shoot for the moon and the stars. All right. If I was on an eval account, I probably would have held trying to pass the eval a little quicker till my 2-to-1. And that ended up pumping though for 50 something points. Okay. So there you go. Again, we can keep going through. Just stick to a plan, limit your risk. Okay. And yeah, that's it. Literally limit your risk, stick to your plan, and you will succeed. I promise you. Stop switching strategies. Okay. Here, same thing. You wait. We move outside the Bollinger Bands here. The fair value gap started right here, and when the price digs into the fair value gap, it shrinks the fair value gap with this indicator. So I would have shorted here. We move outside the Bollinger Bands. A 10-point stop would have been right around here. It wouldn't have gotten hit by a few ticks. And again, 2-to-1. Maybe you got a little bit better fill, right? Whatever. Okay. Wouldn't have gotten hit though. And then again, 2-to-1 risk reward, or maybe you hold back to this red line is the midpoint of the Bollinger Band. Okay. That would give you a 4 risk reward. Boom. Okay. So what that means is you could lose the next 4 trades and be break even. Okay. Here, if you took the same next entry, would have been like right here, you would have gotten stopped for 10 points. Okay, that's fine. We're sticking to our plan. Then we can keep going. Nothing here because we weren't outside the Bollinger Bands. Okay, right here we were outside the Bollinger Band. So you could have taken a entry here. This would have been the most high quality. You probably would have lost 10 points. Okay, but you're still green on the day. Could have taken maybe an entry there. You would have lost that. Okay. I usually like to wait for a quick flash down. You also need to make sure you're sweeping liquidity, as I mentioned, but quick flash down, I usually only do this for the first 20 minutes of the market. Okay, but you can see it does work a lot. It doesn't work all the time, but if you stick to your plan, it works, guys. Okay, even here, this one, again, 10 to 15 point stop is usually what I do. Just depends on what I'm feeling. Okay, but 10-point stop here. You enter outside the Bollinger Band. Just taking it right back to the center Bollinger Band or so is about a 3.5 R. Okay, 3.5 R your risk. Okay, down here as well. This just happened an hour ago. Sweeping liquidity could take a long 10-point stop. The best is when you can have a stop below the whole fair value gap. Okay, 10-point stop, taking it back to the center of the Bollinger Band. Again, about a 3 risk reward. Okay, so this allows very tight stops. So if you lost these trades, right, you're only losing $200 on a single mini contract. Okay, so say, again, if we recap, if you took, let's say, every single potential entry today, you would have maybe won 400 here, lost 200, so you're up 200. Then you would have made 400. You would have been up 600 within the first 5 minutes. Then you take a long here, up 1,000. Okay, this is just trading one mini with a 2-to-1 risk reward, up 1,000. Okay, maybe you took a trade here. Again, you'd be up 1,400. Okay, take a trade here. You probably lost, so you'd be up 1,200. If you take a trade here, you probably lost, so you're up 1,000. Take a trade here, maybe you lost, maybe you're up 800. Take a trade here, depending on your entry. We won't count that as a win or a loss. The worst case is you lost, you're still up 600. So even after losing 4 in a row, 5 in a row, whatever it was, you're still up 600. Then this trade right here, this would have made you $800. So now you're back to like 1,400. This trade would have made you 600. So now you're back to 2,000. So see how limiting your risk to just 10 points. If you're wrong fast. If you're right, again, you're generally right pretty quickly as well. Okay. Even right here, I mean, you could technically take this on this video here. If it moves down to here, you could take an entry, okay, put just a 10-point stop real tight. And again, just a 2-to-1 risk reward. That's all you need, okay? And that is how I pass funded accounts. That's how I get payouts, okay? Stop overcomplicating it and stop. You have enough knowledge right here, okay? There you go. You could buy in if you wanted, okay? This is all it is buy. Okay, I wouldn't trade right now. It's 2:15 in the afternoon. Again, all you do 10-point stop loss just like this, and we're already at almost a 1-to-1 risk reward. Okay, I would generally target 2. Okay, but that's it, guys. Buy outside the Bollinger Bands when we're sweeping liquidity, when we're tapping into a fair value gap. That is my strategy. And when I'm wrong fast, and when I'm right, I let it ride. At least 2-to-1 usually, okay? That's what you want to average. But that's it. I'm not going to keep the video too long. If you have any comments, questions, concerns, leave it down below. I'd love to answer them, and I'll see you.